Alrighty, good afternoon, everybody. This is Christian from Tribeca Trade Group with your end of day recap for Tuesday. I almost said Monday, but it's the first day of the week, which is Tuesday. Shortened trading week, and markets were just a little bit quiet today. Could be I don't know, maybe a little bit of a hangover from this weekend. SPY volume was about 50% of the average volume of last 30-day volume. So really, really quiet stuff. You can see this is my watch list in Bloomberg. And just looking at this column here on the right, you could see SPY. Yeah, I mean, zero point 0.5. That basically means it's 50% of the day's volume. XLF was 70%, so we don't even have anything over one, which means like the day's volume. Even IWM, which was a bit weak today, was 10% less than average volume today. You see a couple names in here, gas, which was oil and gas names, which were under pressure today, down 2.8%. They saw a little uptick in volume, but besides that, just wasn't really there today in terms of momentum, or to the upside or to the downside. Just very, very quiet, and not too much technical damage done here in the charts. Just down 10 basis points today, pretty much where we started. If you look at value areas, these are really key for telling you what you've got going on for the day. For instance, see that just tag of the green line? Well, that was resistance for the day. We never even besides touching it here last night, and one or two candles that got close to it. It looks like for the rest of the week, we'll see if we can get back above value. I think 24.14, will be the resistance for the week, which we kind of fell into this big value area for the week. Why is this value area so big? Because it's based on last week's price activity. So the bigger the range that we did, the bigger the value area for this week. If you look, it's a little bit different in IWM because IWM really didn't move that much last week, but this one continues to be a little bit of the trouble spot. So IWM was down 80 basis points. Below value, just much different picture here. Where this is going to be come into will be interesting. And once we get into the month of June, you can see this is the developing value area for next month. And you can see that we're right around the bottom of this. We're in value again, which is much different than what SPY and Qs look like. I already showed you SPY, but if you look at Qs, way above value, continuing to go up and to the right. But IWM just looks a little bit troubled. And if you look at the makeup of IWM, it's banks. Banks are sorry one of the biggest holdings in terms of sectors. If we bring this up, you always want to know what makes up these indices because sometimes it's different than what you think it is. But banks are 10% of this. REITs are 8%. And banks have been pretty weak. I was in a couple banks last week and I got out of them both on Thursday. I was in a little bit of Goldman and a little bit of Citigroup. They look like they're having some issues here. So this is Carry, the regional banking ETF. Notice this big purple line that's kind of curling down. It's been actually acting as pretty good resistance. You can see when we tag this here, the 50-day. Sorry, the purple line, by the way, the curved line is the 50-day moving average. Sorry, I just, I forget to always explain what I've got on my charts. I know everybody's been talking about a possible head and shoulders in XLF or in the banks. To be determined. I would watch that 200-day moving average. It looks like it's starting to really catch up with the price action. So it's also, notice that we're right at the bottom of value here. So it remains to be seen which direction. Like I've been saying, if you've listened to some of my past videos, I would rather not. I would really tread lightly in this group. If you're going to be in it, which I was just for basically a couple days and made some money in Goldman on that pop. Once it failed at the 50-day moving average is where I took my profits in Goldman. Citigroup, I had a couple. I literally held that trade for about 2 days as well. Managed to time it pretty well and got out of it. I still think Citigroup, the chart looks much better than the rest, but still the group looks like it's not exactly where I want to be. What did perform well today? Solar names. They're at the 200. The whole ETF is at the 200-day moving average. First Solar, which I'm long, got a real nice bounce today. First Solar. So starting to get, I've been long since the break of the 200-day moving average here in First Solar, and it's starting to to separate here a little bit, which is perfect. I got long right in here, retested that 200-day moving average, and has been moving up. So I still like First Solar here. I think it's, as long as it's above the 200-day moving average. I don't know what it's going to do. I don't have my crystal ball out, but I want to be long as long as it's above that 200-day moving average, and that's the trade I have in that place. Other strong performers today. What else? The semiconductors, new 52-week high. They continue to move up. These were very strong. If you go to if I go to SMH just to show you which semiconductors actually made the move today, Micron, which I've been long. I took some profits on Micron today. I'm still long my final piece, but this was a really nice trade for me. This was one of my biggest positions, if not my biggest position, about 2 weeks ago. So I've just been kind of scaling out in that one since it's been rallying pretty nicely. And I want to hold a small piece going into earnings, which they report. I think it's around 620 or 621. But ADI was also nice. NVIDIA also got off to a nice start. AMD was strong today. And you could see you got a lot more names that were outperforming. So nice breadth in this particular sector. MRVL was actually down a little bit today. Avago, same thing, or Broadcom down as well. Other performers, there's one other group, steel names. Steel names were pretty strong today. Some nice X calls today. U.S. Steel, I would put this in the counter trend kind of counter trend maybe for a day trade. Some people in our trading room today play this as a day trade today. It was up 5%. Sometimes this thing will really get going and trend for the day. So I really have no other purpose to trade that name other than a day trade, considering it is way below this white line, the 200-day moving average, and looks a little bit iffy. Actually, similar looking chart was that saw option activity was Macy's. Macy's, we've seen call buyers come in a couple times. Same thing. I would say, if you want to play for a day trade, this chart looks horrendous. Maybe it's almost come off all those oversold levels. On the RSI was about a 20. So, I don't know. I wouldn't necessarily play with this thing. Just not my style. But you could see there's 11,000 of the June 24 and a half calls. And this is the second or third time that we've seen a call buyer come in Macy's. Maybe the valuation, somebody's coming in because the valuation is attractive to them down here. There is some talk that maybe they'll split into a REIT. Who knows? But for me, it doesn't set up right. I like to be in nice trending uptrends. I'll play a counter trend for maybe a day or two here and there, but uh, no thanks. I'd rather pick something else. So that was the outperformers. You could see I left the market breadth indicator on here. You could see that we're all negative here. NYSE stocks, Nasdaq stocks, and Arca stocks were all negative in terms of overall market breadth for these indices. Just kind of what the day felt like. It just looked like we didn't have any positive momentum whatsoever. And then oil and gas names. I feel like ashamed here that I don't have any shorts on in this group. It continues. What a great short this was, coming back up to the 50-day moving average. Look at XOP down 2.8% today. So it looks to me that these energy names will tell the story, I think, better than oil. It tells me that oil might be headed lower. Being that we're seeing such weakness in this group. So we're back to notice that oil hasn't taken out like the ultimate lows, but it looks like this XOP, oil and gas, equally weighted oil and gas ETF is down. And there was even a buyout today, in the drilling space. So if that couldn't get the space going, I don't know what's going to do it. So very weak there. Also, China Internets, KWEB. I've been talking about this chart now for a while. It got way overbought about a week, 2 weeks ago when a bunch of these names reported earnings. I actually started a position. I started a long position here. I've been waiting for this thing to kind of crack a little bit. So I like buying a name that's just burning off some overbought. I think anyway, the group is burning off some overbought levels in an uptrend. So I started a position today. If it happens to go down another day, we've had what 1, 2, 3, 4, 5 red candles in a row. I guess here was your place to take your profits with this big bearish engulfing candle. So it slipped underneath the 5-day exponential moving average. I'm looking for it to hold the 20-day, and if it does that, I will probably add a little bit. So I started a nice option position a few months out in that one. If you're a member of the trading room, you got that real-time alert. So again, I like stocks that pull back in an uptrend, and maybe if it pulls back one more day, I'll add a little bit more to it, and then we'll see if it holds this 20-day moving average. Notice, I like the history of this. If you go back a little bit, and basically since last year, it's been above the 20-day moving average. It's touched here a couple times. This has been the most extended it's gotten, so that's why I'm kind of just being patient and letting this thing come in, and we'll see where it wants to bounce. Besides that, biotech just every time there seems to be a little volatility, biotech seems to also go down. So no particular reason. I didn't see any reason for biotech, but just kind of tells you that the market it's becoming a little bit harder. Not everything is going up altogether. There's some things that are starting to break down a little bit. I wouldn't necessarily call it a breakdown in biotech. It just seems like it's a little bit troubled. Same thing with the small caps, same thing with banks, and definitely same thing with oil and gas names. Retail, didn't really look at retail too much. Retail's also underneath the 200-day moving average, so it's a little bit different picture than where we were a couple months ago. There are some sectors that are breaking down a little bit. So market breadth just is not as strong as it was. You want to be a little bit more picky with for me, I want to be a little bit more picky taking long positions because you can't just buy everything in this market. It's not all going up. So that's for me. People will kind of over dramatize these things. When market breadth, for me, when market breadth starts to um, kind of erode a little bit, which I guess I'll use that word right now because we definitely see some sectors that are just not performing very well. You just want to be a little bit. I want to be pickier and hold a little bit less positions when it's that market. When everything's going up, when market breadth is really strong, you could be a little bit more aggressive and you could have some more positions on, maybe a little bit more risk. But this starts to get a little bit challenging when we start to see some areas of the market come down a little bit. Keep in mind, it's only one day, so we'll have to see what the rest of the week brings. So thanks for watching tonight's video, and have a great night. And I'll see you guys tomorrow. We've got some economics that come out later in the week, but overall, earnings are just about done. We got a couple other names that report this week, but for the most part, the lion's share of earnings is complete at this point. So anyway, have a great night, and I'll see you guys tomorrow.